Hello, I am Kiryu. This video will guide you through the process of trading futures on Binance in a step-by-step manner. We will address all the essential information required, ensuring that upon completing this video, you will be equipped to execute your initial trade in the futures market. If you have not yet established your Binance account, please utilize the primary link provided in the description to register. By doing so, you will receive a sign-up bonus that includes a 10% reduction on transaction fees. To start,
Alright, first thing we're going to do is log into our Binance account. Once logged in, we're going to go to Derivatives on the top menu and click on Binance Futures Overview. Here we have some different options. First, we have the USDSM Futures, which stands for US Dollar Stablecoin Margin Futures. As you can tell by the name, these futures are settled in a US dollar stablecoin. Specifically for Binance, that's either US dollar Tether or BOST, the Binance US dollar. Then we have Coin M Futures, which stands for Coin Margin Futures. If we trade coin margin futures, we're going to use coins like Bitcoin or Ethereum as margins for our trades. We also have Binance Leverage Tokens and Binance Options, which we're not going to cover in this video. So let's click on Trade. Now, under the USDSM Futures or Coin M Futures, that will take us into the trading interface. In this video, I'm not going to go in depth on what everything means here on the screen. As this is a futurist trading tutorial, I assume you've already done some trades in the spot market, and you already know the basics. The spot trading interface, we have the price chart in the center, which we can actually switch from original view to trading view. That way we get some technical analysis tools here on the left side. Then we also have the order book, the most recent trades, and the window where we can place our orders. Now, before you can trade futures, we'll need to transfer some funds into our futures wallet. To do that, we're going to go down to the bottom right to the Asset window. Now, if you don't already have some funds on your Binance account, you can click on Buy Crypto to get some funds on your account. In my case, I already have some funds in my fiat and spot wallet. So, all I need to do is transfer over those funds into my futures wallet. I'm going to click on Transfer. Here we can choose where we want to transfer from. I'm going to choose my fiat and spot wallet. And I'm going to transfer it to my USDSM future wallet, because I want to use US dollar stablecoins to trade. Here, as you can see, I have some US dollar Tether that I can transfer. So I'm going to choose Use T here. And I'm going to simply transfer over 100 US, which is equivalent to 100 US dollars. And now, when I switch the Assets window to show US, I can see that I have 100 USDT that I can now use and trade with. Now we're ready to choose the futures contract that we want to trade. Over here we can find all the available future contracts, but first, let's quickly go over what a future actually is. A future is basically a contract, saying that we will buy or sell a specific asset at a set price at a specific time in the future. So for example, when we are trading a Bitcoin future, we're not really buying or selling Bitcoin itself, like we would do in the spot market, but we are entering a contract, saying that we will buy or sell Bitcoin in the future. So for example, when we go long on a Bitcoin future, we expect the price of Bitcoin to go up, so we enter a contract saying that we'll buy Bitcoin at a later date, but at a price which is determined right now, and which is usually close to the current Bitcoin price. So let's say we go long on a future contract for 1 Bitcoin at a price of $88,000 per Bitcoin on the delivery date, which is when the future contract expires. We'll have to look at the Bitcoin price to see if we actually made profit, or if we've lost money if, at the delivery date, Bitcoin is trading at $92,000 per Bitcoin, we've made a $4,000 profit, because we have locked in the price of $88,000 per Bitcoin. When we enter the futures contract, on the opposite side, if, at the expiry date, Bitcoin is trading at only $80,000 per Bitcoin, we have lost $8,000, unlike in the spot market. Future contracts also allow us to profit when assets are going down in value. So for example, if we expect a Bitcoin price to fall, we will go short on a future. So let's say the current Bitcoin price is $92,000, and we go short 1 Bitcoin. That means that we agree to sell 1 Bitcoin at $92,000 in the future. If Bitcoin actually falls to $88,000 until the delivery date of the future, we'll make a $4,000 profit. And if Bitcoin rises to $100,000, we lose $8,000. So with futures trading, we are basically speculating if the price of an asset will go up or down. In practice, we don't actually need to wait until the future contract expires to get out of our position. If we want to close our long position, all we need to do is open a short position for the exact same amount, and that will cancel out the long position, getting us out of the trade. The profit or loss is then equivalent to the difference in price between when we open the long position and when we open the short position. And even though we might enter a future contract about buying or selling Bitcoin or any other underlying asset, in practice, we don't actually need to buy or sell the asset itself. Instead, we can just use any available asset as collateral, also called margin, to fund our trade and pay up when we close our position. As we've already seen for USDSM futures, that would be either US dollar Tether or Binance US dollar. And for CoinM futures, we can use these cryptocurrencies right here. So as I have the stablecoin USDT in my futures wallet, I need to make sure the USDSM futures are selected. Then I'm going to type in BT, the ticker for Bitcoin and US dollar Tether, to see what Bitcoin futures I can trade that are settled in US dollar Tether. Here we can see that we have a perpetual future contract and a quarterly future contract. The quarterly futures are the ones that have a delivery date or expiry date, which is the date when our position would be automatically closed. So for this one, it would be September 30th. The first 2 digits here are the month, and the last 2 digits are the day of when this future will be settled. The perpetual futures, on the other hand, don't have a delivery date, meaning they will never expire, and we can stay in our position until we manually close them. And we don't have to worry about our future expiring. So let's go ahead and choose the perpetual future contract for Bitcoin. Now the next thing we need to talk about is our margin ratio, which we can see down here. But before we talk about the margin ratio, let's look at what the word margin actually means. Margin is the amount of money we must have in our futures wallet to protect both the traders and buyers from possible losses on trades, so the margin acts as collateral on our future positions. Now the margin ratio is our indicator to see how close we are to get our future position liquidated if the margin ratio hits 100%. Liquidation will be triggered. Liquidation basically means that our margin balance is too low to fund our positions, so the system will automatically close them, and we'll lose our entire margin balance in the process. So for example, if we go long on Bitcoin but the price of Bitcoin keeps declining, then the required margin to keep our position open might become higher than our available margin balance, which at that point the margin ratio hits 100%. And all of our positions are closed to make sure we can cover our losses with the margin balance. We still have the goal is definitely to avoid liquidation and to make sure our margin balance is always high enough to fund our positions. The margin balance ratio is calculated by taking the maintenance margin and dividing it by our margin balance. The maintenance margin shows us the minimum amount of margin balance required to keep our positions open. As we can see here, we are currently in single asset mode, which means that only our US dollar Tether will be considered as our margin balance for our open positions in US dollar Tether. If we switch from single asset modes to multi-asset mode, all of the other assets in our futures wallet, like for example BUSD or Bitcoin, will also be counted towards our margin balance. And by the way, the profit and loss of our open positions will also be considered as part of our margin balance, which means that if we would hit 100% margin ratio and liquidation would be triggered, all of our open positions would get closed at the same time and would lose our entire margin balance. In single asset mode, we'd only lose our USDT margin balance. But in multi-asset mode, we'd lose all assets in our futures wallet. So for now, I'm going to stay in single asset mode. There's actually a setting that we can use that allows us to have a separate margin balance for each of our positions, so that if one position declines and triggers liquidation, then we would only lose the margin balance for that one position. We'd be able to keep our other positions open, and we wouldn't lose the margin balance for those other positions. So when we go up here and click on this button, we can choose our margin mode. Currently, we are in cross margin mode, which means that our entire margin balance, which right now is 100 US solid tether, will be used as collateral across all of our open positions. When we switch from cross margin to isolated margin mode, then, like I've mentioned before, we'll have a separate margin balance for each individual position. So with each position in isolated margin mode, we're only risking the margin that we allocated to this one position. However, in that case, it usually takes less of a price move against us to get liquidated, because the allocated margin is lower than in cross margin mode, where all of the assets count as collateral. Whether we want to use cross margin mode or isolated margin mode really comes down to how we want to manage our risk. So for now, I'm going to stick with cross margin mode. Now let's look at leverage. Leverage trading is one of the main reasons why people want to trade futures. In the first place, using leverage simply means that we're able to exaggerate our profits, but also our losses. So we can click here to adjust the leverage of our trades. It goes from 1x all the way up to 125x, which is insanely high. So for example, let's say we choose a 10x leverage, and a Bitcoin future is currently at $25,000 per Bitcoin. With a 10x leverage, we're able to buy approximately 10 times more than the amount we have in our futures wallet. So if we now want to buy a future of 1 Bitcoin, it will only cost us $2,500, so 1/10 of the actual price. If you want to go totally crazy and choose a 100x leverage, we would only need to pay $250 for a future of 1 Bitcoin. If then our Bitcoin future goes up just 1%, we have already doubled our $250 investment. So you can see why using a high amount of leverage can seem quite attractive. However, on the other side, if Bitcoin goes down just 0.6%, we'd get liquidated and lose our entire $250 investment. So at that point, even if the future goes back up, we are already liquidated, which means we can't make any profits, even when the price increases again. So as you can see, using high leverage can make us a lot of profit fast, but will also wipe us out clean very, very quickly, especially in a highly volatile crypto market. When we click on this icon here, it will open up the ByteDance Futures Calculator. I like to use this calculator before I place a new order to see the most important metrics. Before I actually place the order with a specific amount of leverage, I definitely want to look at the liquidation price for my trade. If I would open this position, and the future price reaches the liquidation price, and then the position would get liquidated, great. So now, we've covered all the basics, and we are ready for our first trade. So again, over here, we can choose the future contract we want to trade. I'm going to choose the BTC USDT Perpetual Future Contract. Then, over here, I'm going to stick with cross-margin mode and select a 10x leverage. Down here, we can see exactly how much in Bitcoin futures we can buy. With our current margin balance of 100 UST and a 10x leverage, we can also switch from BTC to USDT. Here to see how much that is in US dollars. As you can see, it's almost 10 times our 100 UST, so almost 1,000 USDT that we can now invest in this Bitcoin future. So then we're going to choose our order type. For this example, I'm going to use a market order, which means that our order will be fulfilled immediately at the currently best available price. Then I'm going to make sure this is set to UST so I can enter the exact dollar amount that I'd like to invest in this Bitcoin future. Or we can also just use the slider here to select a percentage of our margin balance to invest. So I'm going to invest $500, which is around 50% off my margin balance with the 10x leverage. And then let's say I believe the Bitcoin price will increase So I'm going to click on buy/long. Because this was a market order, it was filled immediately, and we can now see it in our open positions. Down here, this position has a green bar, which means that it is a long position. Here we also have the applied leverage, which we can adjust at any time by coming back up here and changing the leverage. Then we have the current value of our position and our entry price. We also see the so-called mark price, which is a reference price that ByteDance uses for liquidations. We're not going to go further into how exactly the mark price is calculated because, to be honest, I don't understand it either, but I'll leave a link to an explanation down below in the description. Next to the mark price, we can see the liquidation price for our position. This is a very important number you always want to keep an eye on, because when the mark price reaches the liquidation price of our position, liquidation will be triggered and we'll lose our entire margin balance. Then we have the margin ratio that we've already talked about, and that we can also see right here. Then, under margin, we can see exactly how much of our margin balance is allocated to this position. As we have said, at 10x leverage, the allocated margin is 1/10 of the position size, which we can see here, and then we also have the profit and loss, and the return on equity for this position, which by default is calculated using the last price, which is the price that this future has been traded at most recently. If we want to get out of a trade and close our position, there are a few ways how we can do that. The quickest way is to simply click on Market, which will close our position immediately at the best available price. Or we can set our target price here and click on Limit, and that will put a limit sell order in the system, which we can see here under Open Orders. Once the future price hits our limit price, our position will be closed immediately. Of course, we can also cancel any of our open orders by just clicking on the trash bin. Right here, another way to close our long position would be to simply place a short position for the exact same amount. So we can come over here and enter the size of our open long position. But now we will go short, so we click on Sell/Short. And that will then cancel out our long position if we don't want to close our entire position. We could also just reduce it. So let's say we want to reduce our open position by 50%. What we're going to do is look at the current size of our position and cut that amount in half. Then, when we click on Market, we put in a sell order for that amount, and our long position will be reduced by 50% immediately. If we want to sell at a specific price, we can type in the price right here. Click on Limit, and they will put in a limit sell order for that amount. By now, you've probably also noticed the Reduce Only option right here. Whenever we activate Reduce Only, the system will only allow us to reduce our current position. So, for example, let's say we have an open long position for Bitcoin. Now, when Reduce Only is ticked, the system will not allow us to increase our long position, because as the name says, it's reduced only. We also cannot put in a sell order of a larger amount than our current long position, because that would mean that our long position would not only be canceled out, but it would also change into a short position, which isn't allowed with Reduce Only activated. So again, like the name says, whenever Reduce Only is ticked, we can only make our position smaller or canceled out altogether. So it's basically just a safety feature to make sure we don't make any mistakes when wanting to reduce our position. If we want to increase our position, we'll have to do that up here. So let's say we want to double our current long position. What we're going to do is look at the current value of our position here and enter that amount here for the next order. Then we simply click on Buy Long, and that will add this amount to our current long position. Let's do another example, but now we're going to go short Bitcoin. So we believe that the Bitcoin price is going to decrease again. We're going to stick with cross margin and set the leverage to 10 by. We're going to use the slider to set the amount we want to sell short. And then we're going to click on Sell/Short. In our open position, we can now see a red bar, which means that this is a short position. We also see that the liquidation price is above the current Bitcoin price, which makes sense because we are going short. And we want the Bitcoin price to go down. However, when the price instead moves in the other direction, we're losing money on this trade. And if the price goes all the way up to the liquidation price, we will get liquidated in order to manage our risk. We can also set a take profit end or stop loss for each position. All we have to do is click on this edit icon here, and then here we can set our take profit price, which means that when this price is reached, the position will be automatically closed and lock in our profit. Here we can see the approximate profit we can expect with our target price. For the stop loss, we can do the same thing. Just set a target price where we want our position to be closed. Adds to limit our losses when we click on confirm. We can now see both the take profit and stop loss order. In the Open Orders tab, we can also already set our take profit and or stop loss. Before we open a position, we would just have to take the TPSL function, which stands for take profit and stop loss. And then we just enter our take profit and stop loss before we go long or short. On this future, until now, we've only been using market orders. But of course, we can also do limit orders as well. We can just switch from market to a limit and then set our entry price. Here we put in the order by going long or short. And it will be visible right here in the Open Orders tab. And it will stay here until the futures price reaches our entry price that we have just set, which is when it will automatically open our position at that specific price. There's also something called a stop limit order. With a stop limit order, we're able to set a price range for where we'd like to open our position. So for example, we can tell the system that we want to go long when the Bitcoin future price goes up to $25,000. And we are willing to buy in at any price between $25,000 and $26,000. Using this type of order really makes sense whenever the market is very volatile, because then we're basically giving the system a price range where it's allowed to open our position in. If we just use a normal limit order, the system is only allowed to trade at our specific entry price. But with a stop limit order, the system is allowed to take the best price within the price range that we have set. There is also the stop market order. In this case, we're telling the system at what price the market order should be triggered. So as soon as our stop price is reached, our market order will be fulfilled at the currently best available price. Then we also have the trading stop order. This is a great tool we can use in a situation where our position is already profitable, and we want to make sure to realize that profit, but at the same time we think that there's more upside potential. So a trading stop order is an order type where the stop limit is moving with the price, but only in one direction. So for example, let's say we are currently in a long position for Bitcoin. The Bitcoin price is currently at $25,000, and we are already $1,000 in profit because we entered at a price of $24,000. Then we decide to put in a trailing stop with a callback rate of 2%. And we go short with the same amount of our current long position. At the current price of $25,000 per Bitcoin, our trading stop will be set at 2% below $25,000, which is $24,500. Now if Bitcoin falls to $24,500 and therefore reaches our stop limit, the short order will be triggered, which means that our long position will be closed. In that case, we've still made a profit of $500 with our trade. Now, if Bitcoin doesn't fall to the stop limit but instead keeps on going up to, let's say, $26,000, our trailing stop limit is moving up with the price. So now it's 2% below $26,000, which is $25,000 for 180. If the price keeps rising to $27,000, the trading stop also moves to $26,000, 460, which is 2% below $27,000. But now, if the price falls again, the trading stop doesn't move because it can only go in one direction. So, if the price now falls to $26,000, 460, the short order will be triggered, and our long position will be closed with a profit of $2,460. So as you can see, the trading stop is a great tool to lock in profits and limit losses. The activation price of a trading stop order is defining when the trading stop will be activated, meaning that when the current future price moves past the activation price, the trading stop will be set and is ready to move. However, we can also just leave the activation price empty, and then the trading stop will be active immediately. If this video was helpful to you, please make sure to go long on the like button down below, because I can assure you it can only go up from here. And make sure to use the link down below in the video description to get 10% fee transaction owners when creating your Binance account